In this IPO watch, we will be taking a look at DXN. And of course, guys, none of what we say is financial advice.
Okay, guys, it's that time of the month again, and we're going to be covering a deep dive on Timecom and PPHB. And you can get the 20% discount, which is before 15th of May. Make sure to check it out. The links will be in the description and comments down below, where we'll be talking about the fundamentals of both of these companies. And just to tease you a little bit, we own one of these company in FIRL Pro. So make sure you check it out. The links are both in the description and comments.
So here are some IPO details for you guys. 76 cents per share. That's going to be IPO price. It is already open for balloting.
Yes.
Market cap will be nearly 4 billion. So this is going to be a big one, at least compared to what has come in the past couple of months or couple of quarters.
Yes.
PE ratio, which is the valuation, will be nearly 16 times. Whether that's high or low, we will explain a little bit later on. And of course, 19th of May is the date that they go public. So walk us through all these words.
Yeah, yeah. Okay. So sorry for all of
guys,
these words.
you pause the video and take a read,
I'll show you the picture in the next few slides. But mainly they got two business. So the first one is actually very simple. They sell like those very healthy products, consumer products.
They call them SKUs, right?
Yeah, they call them SKUs. So they sell like your coffee. There's supplements that I myself also
few
think.
Here, like spirulina.
Yeah, spirulina I also think. Yeah, I actually had it.
Okay, wow,
spirulina. Okay. And also there's something called noni. Noni also I also consume, but it's not from DXN.
These are like what herbal medicines or?
It is more like a healthcare. Yeah, supplement healthcare dietary kind of things.
Right.
Basically this is their product and what they actually sell, and they actually how they sell their products is through this direct selling model, which we'll go through later. It's a very simple business model. I think you guys who watch, you will know it. And basically they have include these stockists and also external distribution agencies to help them to sell these products. And at these LPD, they have about 452 SKUs products. So FFB is more of like fortified food and beverage. HDS is health dietary supplements. And PCC is your personal cosmetic care products. And this is their active ingredients. And about 90% of the product that they sell is actually manufactured in-house. So that's actually one of the differentiating thing that they have against their competitors, which I'm going to share with you guys later. That is that DXN, they do make their products.
They're manufacturers, basically.
Yes, exactly. Actually, they are like a one-stop shop kind of thing. Yeah, they do everything. And this is their raw material. You'll be surprised about their gross margin, which I'll show you the numbers later, but this is just to share with you guys about them. And the other business service is basically they do like laboratory testing service, which is actually related to their core business. So sometimes they need more like lab tests on these products. Healthcare products especially is very important to do all of this testing, so they got do this for third parties. And also they offer like lifestyle products, and they open a cafe, but this is like for their members. I think it's more towards for their members, so their members is more of like their sellers for the products, so they call it members, and also to the public. And so now that we have pictures over here, this is how their products look like. You can see that about 65.2% of the revenue actually comes from these few products, which is your cereal, coffee. It's 2023 and our IPO prospectuses can't even have color. It costs more. I mean, later you also see how much did they need to spend on listing expenses. The amount is actually
and they can't get colors,
unfortunately. But this is all the products category, so you can see like how much is each of the contribution. But mainly it's more towards the fortified food and beverage. So so if you want to know what is their business model, very simplified. I mean, just talk to any of your friends who are working in Amway or maybe even in DXN, then you kind of know their business model. Okay, so since you know that it's somewhat of like a Amway kind of related business model, obviously you need to know what is their compensation plan, right? Because that is what They're so attractive to sell this kind of product. So number one is that if you are a member of DXN, you can actually buy the
any
products.
Of their products.
Yeah, any of the products for 15% lower. Not any of the products, but specific products that they have this.
Right.
Yeah, so you can buy 15% cheaper than the retail price. And if you manage to actually promote and sell the product to your friends or families, right, you can actually get a bonus. So between like 6 to 21% based on the sales value of the own personal sales. And then if you climb the rank, cause like if you manage to sell more, you manage to and you manage to like recruit more people, right, you'll get a rank which is called the Qualified Star Diamond. And this Qualified Star Diamond rank actually gives you about 25% to 37% commission. Yeah. So you kind of know where is this heading already lah. Like here. MLM. Yeah. Okay. So not only that, they also like provide 2% profit sharing to these QSD members. So you must be very hardworking to sell more products, recruit more people so they can get all of these monetary benefits and also get this non-monetary value, which is you can even get like mobile phone incentive, cash travel incentive, and even like travel all around the world kind of incentive. Okay, so those are the very quick and brief business model. And here are some of the quick stats. I'm not going to go through every single thing. You can just pause the video and have a look. But I just want to highlight that at the moment, they have about 14.9 million registered members. That's actually a huge number of people selling DXN products. And about 3.6 million are actually active members. So how they define active members is that if you actually buy or sell the product in 2 years. So they count you as active. So if you are an inactive member if you didn't buy or any products from DXN for 2 years.
2 years, okay.
Yes, exactly.
Not a super high bar, but okay.
Yes, exactly. So and then the top 10 based on sales in direct selling industry that they have is in Peru and also in Bolivia.
That's interesting.
Yeah, so it's all in the South America. Yeah, exactly.
Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it.
Okay, so this is just some history about DXN. So they were actually once listed in Bursa, Malaysia, and they are in the main market as well. So last time they listed in 2003. The IPO price was about 63 cents per share. And back then, the market cap is about 142 million. So they actually grew like, I believe like 30 times. Yeah, it's like 142 million to now 3.8 billion.
Right.
Yeah, so that's actually a huge growth. And they actually also delisted in 2011. It was took over by the chairman, which is Mr. LSJ, which I cannot really remember the name, but later I'll show you the name. And yeah, basically they just bought it back and they bought it at a premium. So they pay like 32 cents extra or about 1 ringgit and 75 cents per share. So back then in 2011, the market cap for that company was around 394 million. And they bought it back for 9.5 times PE.
Not bad. I mean, it's a double, more than a double actually.
Yeah, and right now they are listing for 15.6 times PE and at the 3.8 billion market
Presumably cap. Because their profile is a bit different, and we can see that Gano Global, right, which I saw was the guys who do the here, right?
No, so Gano Global, they kind of supply one of these active ingredient called the Gano Z. Wait, it's over here. So they kind of like, I didn't put it over
okay,
here.
It's fine. Anyway, it's an international, it's a Chinese company, I assume.
I don't think it's a Chinese company. I think it's a foreign company.
Okay,
yeah.
well, okay, it's a foreign company, and so they bought a stake, and so I think that probably raised the profile.
Yes, exactly.
Right?
Oh yeah, okay, I found it. It's here.
Ganoderma.
The active ingredient is called Ganoderma. So
okay.
yeah, they are the supplier and they help DXN to plant and supply this to DXN. So
they are the ones manufacturing these products, right? Gano Global.
Yes, like in collaboration with them. Okay, so this is the director.
Xiaojin, LJ,
yes, Dato Lim Xiaojin. He's the executive chairman, founder, and also the direct shareholder of LSJ. And he's currently like 62 years old. I went to the briefing. He was very energetic, very optimistic, very gung-ho kind of like chairman.
It's a good motivator, right?
Yeah, it's a very good motivator. And his first job is as an engineer, and he worked in Muda Agriculture Development Authority, which is under the government agency, one of the government agency in Kedah. And then his wife, Datin Leong Biling, is also the direct shareholder of LSJ. And finally, we have another important person is Mr. Teo Hang Ching, who is the CEO of the company. And he is actually an auditor first, but later he became the senior manager in DXN in 2003. These are the key three individuals that you may want to know. And this is the shareholders post IPO. So the LSJ Global owns about 65.2% stake in DXN. Yeah, that's actually a very huge stake. And Gano Global, they own about 13.3%, which I just now mentioned. They plant and supply Ganoderma to DXN. Okay, so what is the moat over here? I can maybe find two moats, but not really like a widening or sustainable moat. It's more like I see it's a temporary moat. So right now they have a huge market share in these Latin America countries. So number one is, if you notice, Bolivia. They have about like 36% market share in their this business segment called the fortified food and beverage. So that's actually a very huge. I believe they are the first mover inside there. That's why they can capture such a huge market share. And also in Peru. So you notice that Peru also they capture like 33%. But we don't know whether this is sustainable in the future or not. But for now, it seems like they have an established market presence in these Latin America countries.
And Malaysia is tiny, although it's fast growing, but it's tiny.
It's really tiny. So they are
the smallest. No, I mean it's the.
It's one of the bottom one.
Bottom smallest.
Yeah, so the top one is actually Latin America, then India, and then Philippines.
Yes.
Yeah, so that's actually an interesting
Philippines, then India.
Philippines, then India. Okay, and then another temporary mode we have here is they have a MLM business structure. So they claim that they don't actually provide any entry fees for members who actually buy DXN.
Which is true.
Yeah. However, if you want to get paid, the bonus and all of those good stuff, right, monetary and non-monetary stuff, you have to actually buy one-off purchase of their handbook, which the price is not stated, and also a sample product, but the price is ranging around like 19 ringgit to 222.
Right.
And you also can actively recruit people under your bottom line.
To summarize, if you want to take advantage of all that bonuses that we saw earlier on, that 6 to 21%, and then if you are a QSD 37%, you need to actually purchase this thing called a members handbook.
Yeah, you have to sell a lot of products.
And some of the products that...
Yes, exactly. You have to sell a lot of products and you have to recruit lah. So basically you need to be this guy lah over here to be QSD. Yeah. Okay, so those are the temporary mode, and let's check out who are the peers. So obviously, when you talk about MLM, I believe a lot of people will start thinking about Amway.
Yeah, Amway, Herbalife, New Skin.
Yeah.
Usana. I used to take Usana.
And if you look at how DXN position themselves against all of these competitors, right, it's actually very, very good. So if you look at, don't look at their distribution point because they are still inferior compared to Amway. If you look at the numbers instead, the numbers is actually very, very interesting because number one, they have about like 10.6 million members, which is helping them to sell their products. And it's actually quite close to Amway. So Amway, they have like 10 to 20 million members as well. They got disclosed that their number of members is actually growing at a double digit. So 16.1% from 2020 to 2022. That is actually a very impressive number. A lot of people are believing in DXN products. And not only that, I just want to show you it is this, which is their revenue CAGR alone versus the average the industry. So you can see that they are actually growing at around 6.1%, whereas the their competitors are actually not
manufacturing
growing.
House.
Yes, exactly.
So I mean, they just add that in. You see, so the question is that actually an advantage? Because now you add in manufacturing and you say that's a differentiator.
Yes.
But of course, we can see the growth profile is very different.
Yeah, exactly. But for now, it is like growing very steadily. But if you look at margins wise, right?
Yes, that's the big difference, right?
Yeah. So it's like 80%. So they have control over their supply of active ingredients, which is very good. So they can control their costs. And also, I believe the executive chairman mentioned that the average selling price for the product is actually increasing one. Because it's a healthcare product.
Yeah.
So it's not gonna like devalue, according to him lah. And yeah, if you look at their EBITDA and all those bottom line net margins, right, it's also around 30 to 20%. So that's actually very, very impressive compared to like others, 8%.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
Okay, so now we go deep into their numbers. So we can see that their revenue there's a down year because this one, I believe it is like after COVID, everything is like kind of like settling down. So there's a down, but now it's like going back to recovery. But if you look at margins, it has been pretty steady because the products that they are selling is all healthcare. So the price rise, it doesn't really affect much. Cost also, they manage to like manage it very well. So you can see that it's very sturdy around like 25% profit before tax margin and then 80% for gross margin. Okay, so this is some of the unit economics. So the first one we have here, it is the number of members. So they have
steadily, even during the post-COVID years, kept growing.
It still keep growing, and now they have about like 14 million members. They have about like I believe 4 million.
Very interesting that in 2020 and 2021, where people couldn't really do all this kind of selling, their active members actually increased.
Yeah, exactly. I mean, it's not only in Malaysia because it still covers like later I think they have breakdown on which country is the most that they have been recruiting. But it's not only in Malaysia, it's like other countries as well. So the number of members aside, we can take a look at the gross sales by customers. So you can see that who are the one that is buying their products, right? It's actually they sell to their members and also to the public. The non-members are the one that is contributing most of the revenue to DXN. And then there's also like other small one, which is gross sales to external distributor agency, which is their non-members people and other business activities. Okay, so this is the second unit economics that you can have. So one thing that is good about DXN prospectus is that they give you a lot of numbers. They disclose a lot of this information to you guys so that you know to like dig and then like piece the puzzles and everything. So they actually they did a good job in that. Yeah, so you can look at the average purchase per members, right? One country actually stand out the most, which is United States. So you can see the average purchase per member is actually growing from like 4,000 to as high as 5,000. Per member. It's actually a very
because I mean the United States have the most money, right?
Yeah, exactly. So and then the one who actually have the number of members who bought at least one of DXN products, right? You can see that the Middle East and India is actually growing a lot. So these are the number of members that is actually growing, which is these two countries, Middle East and also India. Yeah. So right now we have a look at their segment breakdown. Basically, this is the business unit that I actually shared just now, the FFB, HDS, and also PCC. So the majority is coming from FFB, HDS, and then you can look at revenue by geography. A majority of the sales is coming from Peru, Bolivia, which is your Latin America countries, and also Mexico. And then the upcoming one is India and Philippines. Okay, so if you are DXN members, right, you definitely want to know how much they actually pay to these customers. Basically, these customers is actually their members. So basically, so far, every single year, they have been paying about like 60 million at the base. So you can see 2020, they paid quite a lot, like 80 million. And then 2021, they paid about 120 million to their members. And this is basically the percentage based on gross revenue. You can see that they pay about like 5% from the gross revenue to the members. Yeah, balance sheet is very healthy.
Usually, so these sort of companies, right? You can check Amway as well. Right? Yes. They have very big cash balances.
Yeah, they don't really need a lot. Actually, the reason why they went IPO is actually just to settle their long-term debts. Yeah, they mentioned, even though they have the cash.
Interesting.
Yeah, so that's one bit about.
And their long-term debts basically like
non-existent. I think also because they trying to expand to other countries. So that kind of will incur long-term debts. Okay, so cash flow wise also has been pretty good. However, the free cash flow has been dropping quite a bit because they recently have been doing a lot of expansion. And then dividend, they also have been growing as well. I mean, this company is going to be a dividend payer lah. They also did commit that they say they're going to pay about 30 to 50% of dividend payout ratio against net profit to the shareholders. And this is the payout ratio so far, historical, and also the dividend yield at the moment. So return on invested capital, don't be so surprised that they managed to make like 30%, 38%. If you look at Amway's one, it's also more or less the same. So it's kind of like an industry kind of like a benchmark. Although they are kind of like slightly better a little bit than Amway. Okay, so now we go to their IPO proceeds. So you can see that the huge chunk of money over here, which is 80 million, is used to pay bank, even though they are in a net cash position. But the chairman explained that it is used to pay off those very high interest rate, which is 4 to 6% bank loans that has a 12 months tenure. So yeah, he didn't really explain much, but he just say that just to pay bank. Yeah.
It'd be very interesting that as they grow, because they are now listed, they will actually pay some of their members in their shares.
Yeah, you never know. Yeah, exactly. And then another interesting thing is that I think this is the one of the listing expenses that I see that has like 24 million. It's a very huge amount. Usually it's like 3 to 5 million. So this
is a big company.
Yeah, it's a very, I mean, they have a lot of subsidiaries.
They have to fly to Bolivia.
They have
to make sure it's legit.
Yeah, exactly. So yeah, it's about 19.8%. Yeah, so they have to pay quite a huge amount of money to these PICs. Okay, so this is the expansion plan that they have. So number one is that they are buying 100% stake in this LLC, which is in Middle East, from their external distribution agent. And they're also going to buy some few industrial lands in Peru just to like expand their manufacturing and so their cultivation facilities over there. And the next two things is that they are building cultivation facilities in China and also in India. And their next target, because right now they are in 48 countries, right? So their next target is actually to further target some of these European countries, or like for example, Argentina, Brazil, this one, and Algeria, and also Ghana. And all of this you will see it in March 2024.
And so like it's very interesting that the countries that they mentioned that they're going to expand to and are already quite dominant in, these are generally countries that are developing. And so the draw of an alternative way to make money apart from if they even have 9 to 5s or whatever they're going through, is very attractive. And so this sort of model that they're implementing suits developing countries.
And also they mentioned that when they execute, right, they can execute it fast because the business model is already like established. And part of the reason also is because they have this criteria, which is this expansion criteria. So before they even like plan to expand to Argentina, Brazil, and everything, right, it needs to hit these few criteria before they actually like set up a facility over there. So number one, it is that these countries that mentioned, they need to hit like a monthly sales of about 50,000 USD, and also need to have like a 500 active members minimum. And it also must have like a positive trend for growth. Then only they will start to set up incorporation a company over there. So
they just try it out first.
This one is already tried out. I believe it's already there. It's just that now they see the numbers are hitting.
So they try it out. Then when the numbers hit, then they expand.
Yes.
Then they
Exactly. And usually it takes like 2 to 3 years to actually enter a new market. So you can see that they target about 2024, right, to expand to all of these countries. I think back then in 2021 or 2020, they already did their research and everything already. They tried to tap test market and everything. So that's why they are ready to expand further in those countries. And they're planning to use like their own internal generated fund to finance this expansion. Using the IPO funds and whatnot. And they also did mention the startup cost is around like 2 to 3 million.
Which is nothing, considering the amount of cash they have.
Yes, exactly. Okay, so now we take a look at what is the risk. So number one is obviously the competition in direct selling industry. I mean, you see people from Amway or even in DXN are recruiting left, right, center, right? And they also try to like retain active members. So this is one of the definitely the competition for direct selling industry. And another number two is that because these members that they recruit, they are not really like a full-time employees. So they cannot really control your everyday, day-to-day activities. This one is like based on your sales performance, right? So they are all independent contractors. So basically they need to see whether their members can perform or not. Yeah, they have to give trust on their members a lot. And then the third thing is, this is a healthcare product. So product quality is very crucial. So if let's say they input like a bad ingredient inside their products and then which cause like maybe even bad health or maybe negative healthcare or maybe even like death to a customer, right? I think that will hamper their brand name quite a bit. And the last point is, of course, because you are making this product, you are subject to regulatory approval. Yes. And you also need to renew every single...
Got it.
I don't know when, but then you have to renew every time just to get your product up to date and to get the approval from the regulations. Okay, so this is the other risk, which is not really in their control. So it's more towards the weather. So in China, right, they actually stopped the spirulina cultivation when it's winter lah. So they actually like give you the dates, which is around like November to even March. And then if let's say there's any rainy weather or unusual weather, they also stop the cultivation. That happens in April and to October. And then in India, it's also something like China. So this is where they usually stop when there is rainy season or when there's unusual weather. So yeah, that's the few. I would say it's like an uncontrollable risk.
Yep.
Yeah.
Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback, as long as they're constructive.
Okay, so finally we have here, which is the valuation. Right now they are trading at a 3.81 billion market cap. EV is going to be around 3.6 million. Sorry, this is B. Yeah, and then so they will be trading at a EV to earnings to about like 14.8 times, which is not too far out from their PE, which is around like 15.6. Yeah. I would say that this company, even though it is still growing slightly, but I don't think they will have like a very explosive growth because it's such an established company already. I mean, the growth is already there already. It's just that to see whether they can recruit more members and whether they can increase their selling price.
At 65%, they own 65%, the founders.
Yeah,
65%. They would be billionaires. Congratulations.
Yes, exactly. Right, so this is the final takeaway that we have, which is number one, of course, this is going to be a MLM kind of like business model. Yeah. I mean, you have to recruit a lot of members.
MLM without an entry fee.
Yes, exactly. And then number two is that if you are a dividend lover, you will like this company because they're going to be paying about 30 to 50% payout ratio.
And they will have the cash to back it up. That's key.
Yes. They have all the money in their bank already. And the last point is basically, I'm not sure whether this company is in the maturity stage. I think it is like maybe over here. They are going to be soon going to be like difficult to catch.
So here's where I would add that this sort of companies that have this sort of business models will never decline. You know why? Because the desire to make money faster will always exist.
Yes, exactly.
And so until that changes, which I highly doubt that will change in my children and my children's children and my children's children's generation, unless that changes, you know, the future is quite secure.
Yeah, exactly. But who knows, or maybe it will become like an Amway. Because I believe Amway last time, the share price was quite high. Then it dropped like 50 to 60%.
Yes.
So I'm not sure whether this will happen to DXN, but we sure hope not.
Anything else you want to add? So, you know, like we actually start talking about a lot of these companies that are going for IPO and share our thoughts actually much earlier to our members compared to the viewers on YouTube. They've gotten, a lot of them have already gotten these insights before this is launched. And if you want to like kind of speed up getting those kind of information, tapping on our hard work when it comes to all this kind of research, head over to our FIRL Pro program where we have essentially reports, a Telegram group chat that is super active, to help you speed up your research journey when it comes to investing. And if you're, if you want to find out a little bit more, you're not sure if you want to commit, feel free to check out a free sample. And guys, thanks for staying all the way until the end. I hope this IPO video was useful for you, especially if you're thinking of balloting. And I hope to see you in the next IPO watch.